All right, team. All right, guys. So yeah, the Fed minutes report is going to be released at 2 p.m. Eastern Standard Time. Be ready. We will be streaming this live. Bear with me here real quick. We're getting everything set up for it. But yeah, you can see the market had a pretty decently green day so far. We had the JOLTS job report followed by the manufacturing PMI come out already. So we got some stuff coming out today. We'll see if they impact markets heavily or not. Generally, they move markets some. Google is a little bit down today. So is Apple, I believe. Let me check to be sure. David, Fireworks, Santosh, Minal, Ren, DS. What's up, team? Yeah, we'll put a timer up. It's all good. We can do that. Hold on one second. I might have to go grab me some soda here, man, real quick. So bear with me. I might go grab me something to drink. Hold on. So the report is released in exactly 55 minutes. In 55 minutes, maybe a little bit less. Really, we're going to pause this and edit this and actually make it 54 because that's about right. Yeah, 54 is more accurate. There we go. All right, guys. So we are going to be sending out our email newsletter. You can see the SPY at 384s right now. It's been a pretty green day all around for me so far. We're green in futures. We're green in stocks. The FOMC Minutes report, every 6 weeks, the Fed raises or lowers rates, right? And they do a press conference and a Fed meeting to determine how much they're going to raise or lower rates. They do a press conference to announce what the rate hike decision is ultimately going to be and a few other things. And so, that's called the FOMC meeting. Weeks after that, so exactly 3 weeks later after the Fed meeting. So right in the middle, in between releases, like right in the middle, 3 weeks after the release, and again, they're released every 6 weeks. They drop what's called the Fed Minutes report, which is just kind of a detailed recap of the last Fed meeting, as well as maybe some foresight into what they might potentially do for the next meeting. The next meeting is at the very end of January. I believe it's January 31st and January 1st is when the actual press conference, rate hike decision, and meeting is going to be. So with that, maybe we'll get some foresight into what they might potentially do there. But yeah, let me know what you guys think. We're going to get ready to we're going to ready to send out our newsletter. If you want to join our newsletter, it's completely free to join. It doesn't cost anything. We got hundreds of members. Join us here. You can join it completely free. Again, like I said, we're getting ready to send this report out. We're also going to do a poll and a Twitter poll like we always do here. I should be getting my blue check mark sometime soon. All right, sometime soon we're getting our blue check mark. We're also going to do a poll here as well. A bullish or bearish on today's FOMC Minutes report. Let me know, bull or bear, vote on the poll. We got the poll going live today. We're also going to do a Twitter poll. Good or bad market response on Twitter is what we're going to do. We got a positive response, negative response, and we're going to do neutral response. All right, guys. So yeah, the market is bouncing a little bit. Vote on the poll as well. All right, guys. So yeah, we are bouncing up a little bit here. Hit the like button while you're here. Also vote on the poll. All right. Again, we should have a blue check mark sometime soon on Twitter. All right, we're putting out our Twitter poll here. We just did our Twitter poll. Again, follow me on Twitter if you haven't already. We appreciate it. Are we going to keep going sideways until the next CPI? Honestly, I really don't know here with that. Like, I really don't know. The market has been pretty much neutral the last 10 days. We're starting to get towards the top of the range. Like, you can see the top of the range is right around where we are now. We're slightly below it. But we are getting towards the top of that range here. What do you think commodities will go? I don't know. All right, guys. So, yeah, let me know what your response is. Let me know if you think we'll have a favorable response or not, you know. All right, guys. SPY's at 384.30. He's been really strong today, to be honest here. I finally got Twitter blue. Yeah, we should get some good stuff. I don't know where commodities are going to go. Depends on, you know, what you guys think here. Vote on the Twitter poll we got going on. Also, give me a follow on Twitter if you haven't already. There's the link. I think it's going to be a recap of the last Fed meeting. So whether it's going to be positive or negative, I really don't know. Like, I really don't know if it's going to be good or bad, you know, for this. So we'll see. I hope we go up. You know, I want to see a positive market response for sure. But again, if that's what we're going to get, I really don't know, you know. Sorry, I'm standing up at my desk. I got a standing desk because, frankly, it's hard to... we're standing up, but the sun's still in my eyes, man. I had this up. Hold on one second, guys. Oh, shit, I'm breaking stuff. There we go. All right, there we go. That's better. We got the sun in my eyes over here. We had to fix my desk. Is the report out? The report drops at 2 p.m. 2 p.m. guys. Again, vote on our Twitter poll. We got our Twitter poll going on. Market's kind of bouncing. I'm tempted to buy here. You can see the dollar index is mostly neutral right now, though. So the Dixie is mostly neutral right here. So I mean, you know. We're at 384.50s on the SPY. 384.50s. All right, SPY at 384.40s. Do me a favor, hit the like button, hit the subscribe button. Markets rip it up ahead of this, so hopefully somebody knows some insider info and will help the market continue to pop. Hey, nice vision. Hey, thanks, man. I just stick to what I'm good at with Chart Prime. There's a lot of different ways you can use it, though. There really are. There's tons of different ways. There's tons of different ways to look at it and use it. They show you chart patterns. They show you a bunch of stuff. All right, looking at the poll, we got 93 votes. 54% are bullish, 46% are bearish. Looking at Twitter, we did a Twitter poll as well. Thank you to the whoever followed me on Twitter. And we got overwhelmingly negative votes on Twitter. 61% think we're going to get a negative response. 35% think we're going to get a positive response. And 4% basically think we're going to get a neutral response here. The dollar index is starting to move up some, which is interesting because that means there's a positive correlation right now between the Dixie and the market here. The market's moving up over the last 10, 15. The dollar index is starting to move up. Now maybe the market will start to turn. Usually there's a negative correlation between these two. So it's interesting that the Dixie's moving up and the SPY's been moving up, but the Dixie has not moved up as much as the SPY has, although there's somewhat of a positive correlation that's been going on. You can see like big rip up, sideways chop, mostly chop in the market too. So really interesting here. News is dropping at 2 p.m. Eastern Standard Time, guys. We're going to put this up on the screen. We also have a timer going on, don't we? Let me pin it to the top of the page. My bad. Look, there's the timer. That way y'all don't have to keep asking. We also put it on the bottom so you can see it. Y'all can hear the music, correct? Just to make sure y'all can actually hear the music. Man, market is ripping up here. Look at this. Watch 385s. 385 is an interesting level, but look at the market run. Interesting. Yeah, the market's starting to pop. Again, the report will be released at 2 p.m. Okay, good. As long as music's working. All right, SPY at 385s. 385s. So 384.80s. Anything but down is counter trend. There's no catalyst other than temporary manipulation in the options market to be bullish. We have another 30 or 50%. Yeah, but Mitchell, I mean, listen, I'm going to put it, I'll put it bluntly, man. I get a lot of people that come in here and they try to act like they know exactly what the market's going to do, or like the market has to do anything. Just that thinking alone, that the market has to do anything, means that you don't really understand it. No, I'm not saying that you don't understand it, but what I'm saying is, like, if you think that you know exactly what the market is going to do, or that we're for sure going to do anything, again, that's just not the case. We could do anything. The market could go up, down, and sideways. It doesn't matter what the predictions are. I know a lot of people were predicting us to break lows and continue falling down. If you look at the market, really over the last 6 months here, we've mostly been sideways. So we've been going up and down and up and down and up and down. And so with that in mind, nobody knows what the market's going to do. And I think it's one of those things where people have to be honest about that. I think that's an important part of it. We'll try to, Yeah, but pivot points. I thought you said Fed pivots. Yeah. I mean, if the Fed pivots, then the market's going to go up. If the Fed pivots to no rate hike, or, depending on which way they pivot, I guess. But with that in mind, we don't really know what we're going to do, The reality of it is nobody knows. People have tried to guess. Like, the reality of it is, I think we're in a slight downtrend. I think longer term, like the trend is certainly on the downside. That doesn't mean we won't ever break that trend, but longer term, the trend's certainly on the downside. Now, we could do anything here. We could go up, down, or sideways. I think that we're still pretty far away from lows, though. Like, lows of the year are way down here at 348s. We're at 380s. So, I mean, we could certainly hit that, but it would take a lot of red action. And I think with how much the Fed has been changing their tone, you know, I think that it's possible that we don't and that we go up. But I also think it's possible that we come back down too. Yeah, honestly, tune out anyone who claims manipulation when the market doesn't go their way. Honestly, I hear it so much that I start to tune it out too. I'm not talking about anybody, but like, you see it all the time with AMC, you see it with Dogecoin, you see it with, you know, all these different stocks. And at a certain point, it's like, sometimes people are just wrong, you know. I'm not saying that's anybody here. I'm just saying sometimes people are just wrong, you know. And hey, my guy Omar, he said, when are we going to hit 100K subs? Come on, guys. We got to help this channel. This guy's on point with every event. Hey, thank you, Omar. I appreciate you, brother. Thank you, man. Yeah, I'll show you the link where the FOMC Minutes is going to appear. I'll put the link up in chat, too, for you. So if you look here, here's the FOMC calendar website, right? The minutes report is going to be released right here at 2 p.m. So if you look right there at 2 p.m. here, you see this is the November minutes right here. This is the September minutes right here, right? So for December, which is our last one, it's going to appear right here. PDF. That's what it's going to look like. It's going to show up right there. So if you want to get it, that's where you can get it. I'll put this link up in chat too if you guys want to check it out. You know, it's not really about interpreting it though. Like, we can look at it. I'll put the link up right there. It's not really like, we can look at it. What we're really trying to gauge is the market response. You know, that's what we're really trying to gauge, is like what the market response is going to be, how much the market's going to go up, down, or sideways from this. You know what I mean? Like, that's what we're really looking at. The algos pick this up, right? We could read it and we could judge sentiment, we could judge tone, all that stuff. But like, what we're really looking at is which way the algos are going to take this and how much of an impact it's going to have. Yeah, for sure. We should be able to hit. We're at 94. If we get 75 subs today, we'll break 95 today. So if we get 75 today, we'll break it. And I'm hoping we can get there. We got 40 minutes, guys. 40 minutes until the actual report drops. We'll see what their market response is. Do they give interest rate decision or just talk about the economy? So they're looking at the last interest rate decision. They might give some foresight and they might foreshadow what they potentially will do during the next January, February 1st FOMC rate hike decision. But it's not going to be a meeting. This isn't a meeting. This is just a PDF file. 40 minutes. Yeah, we'll see. Looking at our poll numbers here, we got about 80 votes on Twitter. 37% say positive response, 57% say negative, 6% say neutral. So Dixie's still moving up. SPY's moving up with it as well. Would y'all rather look at the dollar index to judge kind of what that does from this? Or would y'all rather look at like a tech-based ETF like the Q or something like that, like a broad market tech-heavy ETF like the Q, so we can look at what tech versus regular market is doing ahead of this? Like, here's the Q right here. We can look at either one. It doesn't really matter too much to me, but yeah. Yeah, it's pretty easy. Up, down, sideways. Hey. All right, guys, so hitting 385 on the SPY. We'll see if we end up continuing to push up and break. We've had a lot of green action here. Man, that last song sounded like I walked into Abercrombie. You know, we're going to change it. Hey, tech is all over the place. Yeah, here's the Q. We're at 266.50. All right, we're also gonna send out our email newsletter regarding this. 385.05s. All right, guys. Do me a favor, hit that like button, run those like numbers up. We're also going to be sending out our newsletter here, team. Try to put my Christmas tree out. Market's still testing 385s here. All right, we're sending out our newsletter for the FOMC Minutes report. All right, we're at 385s here. Q's still pumping up some. Hey, thank you, Mark. We appreciate it. I'll be right back, guys. Listen, if I take longer than 30 seconds, I will only respond. What should my name be if I take longer than 30 seconds here? I will only respond to dump for the rest of the stream if I'm longer than 30 seconds. Look, I'm looking at the time. At 34, I'm going to go. If I take longer than 30 seconds, I can only respond to dump the whole time. All right. If it gets to 34, 33:30. All right. Whew, with seconds to spare, you know. All right, we're in. All right, now we can respond to whatever here. All right, guys. So yeah, so SPY started to move up. We're at 385. Let's see if we actually hold over 385s. I'd really like to sit down. I don't think the sun will be in my eye if I sit down. All right. There we go. We sat down here. The sun is in my eye, man. Ugh. Thank you, baby. Hey, wait. All right, we're back. Market's rejecting at 385. Q is rejecting too. Oh, thank you. Huh? What? You can.
Well, how long are you gonna be?
All right, guys, what do you guys think? Fed minutes report drops at 2 p.m. in almost exactly 30 minutes. Do you guys think it'll be good or bad for the market activity? Good or bad? Positive or negative? Let me know. How you guys doing today? You guys green? We can see by looking at our Twitter poll, 40% think we're going to have a positive response, 54% think we're going to have a negative response, and then 6% think we're going to have a neutral response here. Here's my P&L on the day trading futures. So we might try to trade some action from this. We're up about 700. Today we made about 140. I need to really start trying to trade the regular E-mini, though. I really need to. I need to start trading the regular E-mini. You can watch the FOMC Minutes live right here. We'll show you it, and we'll watch the market reaction from it as well. All right, guys. Pull it back here. Should I buy this dip ahead of it? I think I will. Look, we're going to buy. Let me just mark it into this thing. I'll buy 100 shares of the SPY right now. We'll use a P&L level. We're already green on the day, so I could take this as a comfortable enough trade. Use maybe like this low as a risk level here. Like I said, this Thinkorswim account's about 40,000 right now. So we're at about 100 shares of the SPY. Yeah, let's see if we get a little bounce. All right, guys. So all right, we got a nice little pop up here. We're going to take some profit into this. All right, yeah, we're going to go ahead and take some profit into that. We're holding 5 shares left. We were down on the trade already, but that's okay. We got a little pop. We'll see if it actually holds. All right, this music is too much like a rave for me. I'm just not really about it. No, I'm not really about that either. Feels like I walked into an Abercrombie in the 90s. It's too much for me. Wait, y'all hear my angry dog over here? You hear this dog? Listen to this dog, man. It's a mean-sounded dog, bro. Good. You hear this dog, bro? This dog is angry, you know? Good. All right, guys. So we're still getting some pop up. We're holding 50 shares here.
You hear?
What's he barking at?
I don't know. I just looked around.
Here, oops, hey. Sorry, my wife left the door open. So that's a mean-sounding dog, though. That's Bruce right there. He's really a sweetheart, to be honest. Like, he's just like a ball of love, you know. He honestly is. If you're us. If you're a stranger, that's a different story. He doesn't really like you, you know. All right, so we're still popping up a little bit here. Let's see if we continue it. right, guys, so we're rejecting a little bit, just 50 shares here. We break underneath this level here. We're going to cut this fast and get out slightly green, but barely, mostly break even. We're not going to take any, we're not going to hold any big positions through the actual report. We're going to cut our trades and then maybe jump back on and piggyback off of some momentum that we get from the actual report here. So that's the plan, at least. All right, guys, so we're starting to pop up a little bit on the SPY. We're up to 385s again. I'm gonna hold this, but again, we break underneath that, we'll cut it. The Q is actually looking okay. We don't have any other big earnings this week, do we? Got so much economic data coming out after today. Nothing this morning. We have a lot of economic data coming out. Tomorrow we got Walgreens earnings in the morning, but tomorrow we've got jobless claims, import-export prices, and some other stuff too. And then tomorrow evening, we don't really have anything big either. All right, there's a pop-up. Again, we were already down on the SPY, so we're trading red. So we're up a little bit more than this here. This is just a little trade. The risk is just small with these little trades, and my accuracy is very high from them. Take a little piece off at the top. Give me your best FOMC abbreviation. Yeah, the report's going to be out exactly at 2 p.m. I mean, listen, guys, I'm not trying to be hard on you, okay? I'm really not. But when y'all are asking me what time the report is released, then literally right here, what does this say? I'm not going to say it's right underneath me in huge letters. I'm not going to say that. But it might be right underneath me in like really, really big letters. It might say exactly what time the report is released. I don't know what happened to my timer. My bad, guys. For whatever reason, my timer disappeared. That's my fault. Okay. Let's see. We got 25 minutes. 23 is what we'll keep this. All right. Now we got a timer up there. Yeah. No, honestly, I'm not really mad. I'm just kind of trolling you guys because it's really funny. Like, I really don't mind. I mean, listen, I appreciate anybody being here. Listen, y'all can ask me what time it starts twice a minute. And I'm still, I mean, you might get banned eventually, but like, I'm still not going to be mad. I'm just happy y'all are here. We appreciate it. The SPY's moving up. Should I take more profit here? Again, the whole goal of this is not to hold this through the actual report being released. We're going to take a little bit more off there. Slowly scale out of this. Hold little 10 shares maybe through the actual report. Yeah, it gets dropped here by a pigeon, through like a scroll. They fly over my window and they just throw the scroll into the pigeon just drops it and kind of air bombs it into my living room. And then I grab it and then I read what the report is going to say right at 2 p.m. though. So like really they drop it in here at like 1:50, 9 and 30 seconds. And then like I hurry up, I open it up and then I read it really quickly. Market's starting to push up. It's at 385.30s. Time is just a construct, bruh. Anyways, market's starting to move up a little bit. It's showing up in a water bottle. Okay, that's fair. A little bit better than a scroll. Scrolls can sometimes be a little bit fragile, and so SPY is moving up. It's at 385.20s here. The Q is actually moving up as well. Again, the real understanding of the market. Here's the last 10 days. We are right at the top end of the range of the last 10 days. So here's the last 10 days. This is that's basically the market trend the last 10 days. We are right around the top of it. So we're right at the top of this right here. This is us right here. So Again, we're right at the very top. I changed it to pink somehow. Forgive me. But yeah, we're right at the very top. We'll change it back to blue. Right at the top of the last 10-day range. If we can break 387s here, so look at this level up here. This level right here might be relevant. So if we can push up and tap that and break it, that'll be nice. Who knows if that's actually going to happen, but we can hope for that. It's not a decision, it's a recap, is what this is, team. All right, we're at 385.20s. I kind of want to buy the dip again. Guys, what do you mean when they keep the rate hike on the same level with 50 basis points or they announce less aggression? Well, that means that, okay, so that should mean that inflation is starting to go down, okay? The more aggressively they raise rates, the worse inflation currently is, basically, is what the Fed is trying to say there. So, like, it's a little bit more nuanced than that, and I know I say nuanced a lot here, but basically, the less aggressive the rate hikes, the less inflationary problem, the lesser inflationary problems there are. So that's basically it, right? So if the Fed does not raise rates as aggressively as expected, or they do a rate hike that was less than expected, or they do no rate hike, then that generally is positive and more optimistic regarding the short-term market and economy. Now, if they raise rates really, really aggressively, that's generally worse. That means that they think inflation is still a really big problem and they need to get it under control fast. But there's a lot of arguments in between this where, some people prefer to just rip the Band-Aid off and do a really big rate hike, which will cause more short-term pain, but will ultimately do the most for long-term inflationary problems. So there's a lot of middle ground and a lot of arguments that are very subjective in nature that, maybe more or less rate hikes, good or bad. Again, it's a balancing act from the Fed because the more aggressively they raise rates, the worse the stock market's going to do short term. And that's the point, because they're raising rates in order to curb spending ultimately, right? And by curbing spending, when people stop spending, businesses lower pricing, and it thus combats inflation. So that's essentially what's going on, is that the Fed is trying to curb spending when they raise rates. Once you understand that, you can kind of understand the nature of all of it. Now, it doesn't mean it always works perfectly or everybody's happy with the decisions, because, of course, people are invested, 401k, stuff like that. They don't want to see super aggressive rate hikes because, again, that drops markets, causes less spending. Correct. Not always. It's never a for sure thing, Adam. It's never like this is exactly what they're going to do and this is exactly what the response is going to be. It's never 100% that. Like, it's certainly just based on probabilities. And it's never a for sure thing. Nothing in the stock market is. Company can have great earnings, great guidance, great expectations, great EPS, and then drop 15%. It doesn't really mean anything. Sometimes it's nonsensical. But like as a gauge on probabilities, yes. Depending on how extended the market is. Neutral is the only one where, you might not get that reaction. Neutral, it's a coin flip. You don't really know which way the market's going to head if we get a neutral, rate hike. Last time was 50. A lot of people thought if we did 50, we'd go up. We dropped 50 during the last rate hike decision and the market fell big. So you never really know. Yes, we're streaming the FOMC Minutes live here. There's no meeting. All right, guys, 18 minutes, 17 minutes, really. What do you guys think? How much you guys think we should raise rates or lower rates? I'm looking at the poll that we got going on. All right, guys, so we're at 385s, right around that area now. How about gold? Gold. The reaction from gold is, we don't know exactly how we're going to react. I'm not much of a gold trader, though. 75 basis points, nah. Rates leaked. Bro, every time we do an FOMC meeting, somebody tells me the rates leaked. Same thing happens during like CPI reports, especially, right? Every CPI report, they'll be like, bro, it's leaked. It's coming in at 8.4%. The market's going to tank. Last time they said that very thing, they said it was going to be like 8.1 or something. It showed up as 7.7. And so you never really know what they're going to do. Okay.
I don't know what she's kind of acting weird. Rosie, she's acting like she's like alert to something. She's like, she had her hackles up and everything. She's looking at the back door. I don't know. She's
here. You want to bring me the 382? Well,
this isn't good.
I know I can use it. I know.
Just leave it.
Okay.
You just do what you.
That won't work. That's all right. All right.
Hey, and I'm gonna walk her out of her crate. I'm gonna let her walk around. Okay.
All right. You sure? You better close all the doors, close all the bathroom doors if you're going to do that. All right. Love you. Sorry. We got this new puppy, and Carol says she's acting all alert or something. But I'm sure it's fine. All right. We're pulling back now. Yeah, nobody knows what anything's going to do, really. Nobody knows which way the market's going to head. No, what we meant by that is like the dog's going to get left out inside the house. And so if we leave the bathroom doors open, the dog's going to go straight to that toilet and drink the toilet water. That's what's going to happen. And so we got to close the bathroom doors to make sure, it's happened before and it was not fun to clean up. Not fun. Yeah, every time we get somebody being like, yo, we know what the report is, they're usually trying to influence their own positions. Like if I got a long position, and somebody wants to be sleazy, they can be like, hey, the report's leaked, CPI is going to come in at 5%, rate hikes coming in at minus 25% or minus 25 basis points, but the problem is like my little stream here is not influencing anybody. The SPY has got, I'm not influencing the S&P 500, that's for sure. We can close the lid, but like he's still going to be messing with that bathroom, All right, guys, less than 15. All right, guys, SPY at 384.80s. John, what's the craziest reaction you've seen from past minutes reports? I don't know, man. They all blend together at a certain point, brother. Like I honestly, we cover this every month or every 6 weeks. And so they all start to blend together at a certain point. Same thing with the FOMC press conference. SPY moving down a little bit. Look at the SPY dip here. Let's see if there's a reason for this. Tesla filed paperwork to make EV for airplanes, boats, and more, according to electric. Yeah, I don't know if there's a fundamental reason for this drop. Maybe not. Yeah, a leak, huh? All right, 384s. All right, we got about 700 people here. I would never ever pressure you guys to subscribe, but like if you don't, you won't be able to say anything. So we're gonna hit the sub only mode now. Announce yourself. Show us that you're supportive. Listen, guys, everything we do here is free. We don't charge a penny. We don't sell anything. We don't act like experts. We don't even claim to be good traders. Just everything we put out there is completely free. And so if you haven't already subbed, do it now. Help me hit. Well, listen, all we need is a measly little 70 subscribers to hit 95,000. All right, we're making that push towards 100. I would love to hit 100 in January, if not January, February. The holidays slowed my momentum down. We were hitting, 3,000-4,000 subs a month. Slowed down a little bit because we took so much time off during the holidays with the market being closed. So, hey, help us get there. Hit that subscribe button, guys. We appreciate it. Announce yourself. Show us that you're subbed. Brokers to trade futures on in the UK. Well, you can try out TopStep. I'm sponsored by TopStep. TopStep is a funded account program for futures. What they do is they give you a demo, and if you can hit the target on their demo while following their rules, they fund you. 90% split once you're funded, but most people are not going to be able to get funded because it's really a challenge. They're legitimately funding you money, so they want to make sure you're a good trader. But what it's really good for is testing your skill. You can try it out. It's the base one's less than $150 a month. And it tests your skill. You got to hit certain profit targets without hitting max losses with a certain amount of contracts. And it's a reasonable ratio. Like the base one's 2 to 3 ratio. Like you got to make 3K in profit without losing 2K total, or like $1,000 daily max with a few other rules, but very reasonable rules. And if you're good enough, you can pass it. If not, it builds you into a better trader, and they've got a ton of resources. It's called TopStep. I'm certainly biased in their favor because they're a sponsor of mine and pay me money. And so, and I get a commission if you sign up. So I'm certainly biased in their favor, but genuinely useful. There's no PDT rule in futures. And so you can day trade short. I'm pretty sure you can use it overseas. And of course, I try to be transparent and honest. Like I said, I'm certainly biased in their favor. They pay me money. But like I said, I think it genuinely helps your, trading. But yeah, I mean, I've been trading for 6 years, so I'm not really a beginner either. We called ourselves beginner trading in the beginning because that's what we were. But now we're just kind of a resource and community for traders, I guess is the best way to put it. I could change the name, but like we're a resource for traders. That's the point. So I think beginner trading works, Yeah, we'll see. We try to be unbiased. I mean, I like taking long and shorts. You know what I mean? So I understand both. Like I said, I think the longer term trend is obviously on the downside. I mean, okay, there's different levels, and this is how you know. Weekly chart, obviously, SPY's going up. S&P 500 is going up. Yearly chart, market's down. And so on like a yearly basis, the market is certainly downtrending. On a 6-month basis, market's purely sideways. We're exactly sideways. We're literally right where we were. We're slightly green over the last 6 months, but not by much. So very sideways trend over a 6-month period. Over a 90-day period, we're slightly green over a 90-day period. Over a 20-day period, we are, let me see. We are slightly red. Over a 90-day or a 20-day period. Over a 10-day period, we are slightly green, but pretty break even. I'm waiting till after the Fed meeting. Hey, what's up, Will? Hey, thank you, man. Bay Area. Hey, nice, man. Yeah, I'm from Louisiana. So nice to meet you all. Appreciate the love and support. Hit that subscribe button if you haven't yet. I appreciate it. SPY is up there. Let's see if we can break 385s. Go Tigers. Hey, what's up, Tim? Yeah, man, I'm in Houston right now. I don't live in Louisiana anymore. What minutes exactly are anyway? So the Fed minutes report, again, is a PDF file that goes live at 2 p.m. in approximately 7 minutes. It is a recap of the last FOMC decision with maybe some like foreshadowing into what they might do during the next FOMC meeting, which is going to be January 1st is when that next FOMC meeting is going to be. So ultimately, here's the thing. This is the reality of the Fed minutes. I'm not going to be able to read the whole thing live here, and I don't think you guys want me to. I mean, I'm a pretty fast reader, top 3 readers in the world right now, but like, there's no way I'm going to sit here and read a 12-page document just sitting on stream reading. Y'all can read it yourself, But what we're going to look at is the market reaction. I can also give you the link on where you can find the report, which I think we forgot to put in the description. So we'll put that in the description as well. But again, it's a 12-page document. The important thing to understand about this is that the algorithms are going to pick up once the report is dropped. And so the algorithms are going to, scourge through this report, try to pick up sentiment, adjectives and sentiment tone and all that stuff, right? So they're going to dig deep into this report and they're going to react to it. So you are going to see a market reaction from this. And how big it's going to be, we'll have to wait and see. But yeah, to get the Fed minutes report, this is where it is. You go down to the December 13th level. Here is December 13th. So this is the last Fed meeting. It's going to show up right here. You can see the last one, November Fed meeting. You see the minutes report. You can look at a PDF or an HTML file. Either one of those works. We'll put this in the description as well if you guys want to see it. And once the report's actually dropped, we'll post the link here as well. But what we're really watching is the actual market reaction. So there is that report right there. We're going to put it in the description as well for you all. Yeah, all good. All right, guys, 5 minutes. Yeah, Bitcoin. Where's Bitcoin at right now? Bitcoin's at just about 17K here. So if this report's positive, it should give Bitcoin that boost to 17K. Also, remember, guys, a lot of people do this and they're like, oh, bro, you were 20 minutes late. I wasn't. A lot of people are behind on stream, right? So you want to make sure you are actually clicking this live button right here, because if you pause it or if you have latency problems or lag, then it's going to put you behind. You're not going to see the actual release, right? So you want to make sure you go to the play button and you click the live button right there, right? That way you're live when the report drops. It's actually at 2 o'clock when you'll see it on stream. Yeah, all good, Alex. Yeah, and we'll see what happens here. Market's pulling back, 384s, 385. High of the day right around 386. I'd watch all those whole dollars on the SPY. We can watch the S&P 500 too. Here's the Q. Here's the actual S&P right here. Right around 3850. A little bit over 3850. Right around 3860 actually. Yeah, that's right. If the button's gray next to the play button, you're delayed. If the button is red, then you're live. Will this FOMC affect markets slightly or a lot? I don't know. Generally, it affects it a good amount. Is it as much as CPI or the actual FOMC rate hike decision? Of course not. But it'll move it some. How much? Sometimes it doesn't move it a lot. Sometimes it moves it big. So depends. I hope I didn't accidentally block somebody. I didn't. Okay, yeah, good. I didn't. All right, guys. But yeah, so we're hanging out here. Report drops in about 2.5 minutes. About 2.5 minutes. Again, we're just kind of sitting back waiting for this to be released. We're not going to really hold anything through this here. We're going to cut everything. Wait, am I still in the SPY? I am. Oh, man, I forgot to cut it. Here, we're going to cut this. I'm not going to hold this through. It's just too risky. We made money on the trade, but it was a very small trade. Like I said, we're trying to just be patient. Trying to bet on exactly how the market's going to respond in these reports is usually a gamble. It's kind of a coin flip. Nobody really knows. Same thing with CPI reports, Fed meetings, all that stuff. Nobody really knows what the Fed's going to do or how the market's going to react. And so taking a really big position ahead of this is usually the wrong move, to be honest. All right, guys, here we go. We got about 2 minutes. Bull or bear? I don't really have a stance. I really have no idea, what the market's going to do. And honestly, the votes are pretty split out of 1,400 votes here. Look, out of 1,400 votes, 51-49. So we're pretty split. Even on Twitter here, we got 55% negative, 39% positive, and 6% neutral. So a little bit more polarized on, or a little bit more bearish on Twitter. More neutral. All right, so market's pulling back here, guys. Again, we got less than a minute now. Less than a minute. Yeah, we trade crypto. Hey, nice, Jimmy. Yeah, hey, help me hit a 95K. We should hit it right now. All right, guys, 45 seconds. Hey, we did break 95K. Thank you guys so much. We broke 95K. So yeah, we appreciate it, guys. All right, the report's coming out 20 seconds. All right, SPY moving up a little bit. We're at 385.40s. All right, here's the report drop. 15 seconds, guys. We got about 1,800 people here. All right, here's the report. Let's see what it shows. Let's see how the market's response. All right, there's the report released here, guys. So there's the actual report being released. Let's see how the market's going to respond. Looks mostly bearish from the report. All right, a big uptick. You see some volatility rolling through from the report. Look at the movement coming in here. So kind of a doji candle now, starting to look to be trending more upward. Let's go ahead and check to see what the report actually says. Bear with me. Let me get this report up. Again, so we refresh here. You refresh here, you'll see the minutes report. Still not out yet. Let's wait. Still not out yet. So waiting for the actual minutes report. There it goes. All right, so you can read all this here. This is where the report is. I'm going to post this report to the chat so you guys can actually read it. But the market is starting to surge up here. Here's the actual report right here. So there's the report in chat if you guys want to watch it. This market's surging up though. Look, we're at 385.20s right now. 385.20s. So market's starting to push up. Very bullish response here. Let's see what the dollar index is doing right now with this. I should have held my long trade, it looks like. But they're 385.50s here. The dollar index is starting to fall on this. I'm going to post some cliff notes. All right, so I'm going to post some cliff notes here. All right, so during the policy meeting, continued to anticipate ongoing increase in Fed funds rate would be appropriate. So here is kind of some cliff notes from it. No participants anticipated that rate cuts would be appropriate in 2023. So that's kind of a negative thing here. Yeah, we're going through the outlook now, Xavier. So again, you can see here, no participants anticipated that rate cuts would be appropriate in 2023. And the policy meeting continued to anticipate ongoing increases in the federal funds rates would be appropriate. And so again, that's probably pulling the market back a little bit here. Yeah, we said it wrong. I'm trying to read it quickly so you guys can get it. Anticipate. So again, no participants anticipated that rate cuts would be appropriate in 2023. Market's starting to turn. We are getting an uptick in the dollar index, and so that might mean that the market's going to start coming down some. I mean, this isn't good. I wouldn't really say this is good. You know, again, what is going to influence positive market reactions is going to be like potential rate cuts on the table. Look at the dollar index just break highs here. So the dollar index just broke the last 20-minute high. So there goes the market start to turn on the downside here. The dollar index is ripping up on this data as well. Look, so it's starting to move up. It's at 104.30s. But yeah, that's definitely not good. That's not what you want, really, I would say. Market's starting to break down. We can read the full thing. Again, we've got the full thing up in chat right here if you guys want to see it. But yeah. Market's starting to break down. Dollar index is starting to move up some too. We'll post the cliff notes as we get them as well. So bear with me. Again, here is the actual report right here. See if we can find some more cliff notes of it though. Both market and desk survey-based measures indicated expectations for the committee to maintain an elevated policy rate through 23 in the December survey. The median respondents' model expectations for the path of the federal funds rate in 23 shifted higher by 25 basis points relative to the November study. The survey-based estimate of the expected policy path in 24 continued to suggest a decline in the target range for the funds rate over 24. Little change from the path anticipated in the November survey. Markets break it down from this. The dollar index just tapped highs. So yeah. overall, we're getting a bearish response from this as well. And again, if you guys want this report, I'll post the link here just to show you, like, look how long this is. This is very long. So effective on the 15th, the Federal Open Market Committee directs the desk to undertake open market operations as necessary to maintain the funds rate in the target range of 4.25 to 4.5. Conduct overnight repurchase agreement operations with a minimum bid of 4.5% with an aggregate operation limit of $500 billion. The aggregate operation limit can be temporarily increased at the discretion of the chair. And again, you guys can read more. I'm going to post this link in chat. We're starting to bounce up a little bit here. Let's see if this is the end of the bearish action. But again, you can see the dollar index all the way up to 104s here. So the dollar index is moving higher. So if you want the PDF file, you just go back here. Here's the report again. I'll put it in chat. There's the report. It's the HTML. It's not the PDF. But yeah, it's right there in chat if you guys want it. All right, so market started to bounce back up a little bit. We didn't have the biggest reaction this time, but you can see we certainly reacted some. You can see the big movement here. We kind of retraced a lot of the gains we made on the day at this point in time. And then now we're starting to creep back up with the dollar index starting to pull back. The dollar index is important because the dollar index is also like what a lot of people use to gauge inflation as well. You know, the higher the dollar index is, the less confident people are in inflation, you know, as well as like if your cash gains value, you're not going to invest it. So you're not going to put it in the S&P 500, for instance. So a lot of the time there's a negative correlation between the Dixie and the market itself. And you can see that here with the dollar index starting to fall and the SPY starting to push up and vice versa 2 minutes ago. So there's generally a negative correlation. And you can kind of see that now, how we're starting to turn. Hey, thank you, man. The results are already out, guys. Yeah, Bitcoin hitting 17K is going to be tough right now. If the dollar index keeps falling, it could happen. You know, if you look at Bitcoin futures here, yeah, we tapped 17K. I wouldn't count this out yet, though. I don't think this really means much right now. This is a pretty neutral response. We're right around where we were when the report came out, and now we've swung up and down in a pretty big range, but we are right back starting to climb up here. So I wouldn't really count it out yet. You know, it's still possible that you know, it is possible that we keep it up. Would y'all rather have the dollar index or Bitcoin up? Let's say that inflation is constant. 75 basis points throughout the year will be bearish ultimately. I mean, that's kind of a loaded question. It's very difficult for me to predict with all the nuance of market activity and reactions to rate hikes. What will be bearish ultimately from that? Now, the only thing I can compare that to is convention. You know, a 75 basis point rate hike is conventionally very high. So generally, if that was sustained all the way through 2023, that would probably be bearish. You know, if we don't start to ease some of those rate hikes, especially considering that the last one was 50, for us to go up to 75 and then hold that throughout the entire year, I think that would probably be interpreted as bearish if we did 75 basis points throughout 2023. But again, chat, let me know what you guys think. I could be wrong there. There is no speech. Very nice, Nicholas. Yeah, all good, man. All right, guys, don't forget to hit the subscribe button. I gotta mute it, man. My dog Bruce, he's a German Shepherd. Y'all want to see Bruce? He's a good dog, man. He's a cool dog. But he barks all the time, bro. Like, he does not stop, as you guys can hear, man. He is. Bruce. Yeah, Carol wanted to name him something mean. I was gonna name him something easy. Yeah. All right, market's starting to fall. So there goes the market starting to turn back down here, completely reversing from, you know, the trend we were in before the Fed minutes report. We are starting to reverse. We're all the way down at 383s. Here, I'll put the link for it up in chat. I'll put the link up in chat. I also have the link to it in the description. You just go down, you find the December 13th one, and you look on the right side of the page. Listen, I can't get mad at him for barking, man. You know, the worst thing that you can do is respond to your dog when they bark. He's not really that bad. He'll get over it. The worst thing you can do is respond. You know, like, honestly, Bruce isn't really super loud. Even if the neighbors did have a problem with it, like, they can just deal with it. You know, like, dogs bark. There's nothing you can do. I'm not going to put a bark. The only, you know, like, there's nothing you can do with them. And the problem is, like, a lot of the time your neighbors want you to bring them inside if they start barking. That's the worst thing you could ever do, right? Because then they'll be conditioned to bark every time they want to come inside. You know, if you let them in every time they bark, then, you know, you got to just completely dilute it and just say no. Yeah. How many basis points did we get? This wasn't the actual rate hike decision. Right. He's doing his job. Hey, thank you, JF. We appreciate you, man. All right, market's starting to pump up a little bit. Let's see if we actually hold. Okay, no, we're not actually pumping up. I think I overused the word pump. But there's the pump. Some top three. Yeah, Bruce is cool, man. On a serious note, this helps so much, John. Never knew how much an after report and foreshadow can affect this quick as much. Definitely will assess and trade positions come next minute's report. Thank you. I appreciate it, man. Thank you. Yeah, we're testing the VWAP now here, so we'll see if we hold the volume weighted average price. I know, I even said I made fun of myself for saying pump. I said I overused the word pump. But I mean, relative to the SPY, it depends. Like, the SPY doesn't move big percentages regardless, you know. It's also a subjective word, you know. All right, guys. Obviously, my dog is just barking out of control right now. I will be right back. I'm going to go see what he's doing. See what's wrong with him. Hold on. I'll be right back. I'm going to maybe give him a treat. Try to calm him down a little bit. All right, he's fine. Carol left Bruce out, but she put Rosie in the crate. And so Bruce was barking to try to tell me to let Rosie out, which I did. And so now he shouldn't bark at all. Look, I'm not saying Bruce never barks when something's wrong, but a lot of times dogs are just barking just to bark. Maybe they see something, maybe another dog they can hear better than we can, much better than we can. So maybe they hear another dog barking. So yeah. I will ask, please don't twist what I say out of context and then use it to criticize me. Like, that's ridiculous. Anyways, SPY started to move back up. We'll see if it holds 383s. A little bit of a negative reaction here from this, but not really huge. Again, as I suggested many times, some Fed minutes reports just don't get a big reaction. Sometimes you do. It kind of depends on what's going on in the market. You can see we had the report drop here. And so far, the report came out right here. And so far, we're down. We're right around where we started, but kind of a neutral reaction, not anything major. Dog can smell SPY about to dump. Bro, my dogs can smell everything. They're definitely top 3 smellers in the world right now. Yeah, I'm not going to use a collar. I'm not going to use a bark collar on the dog. That's what I was trying to say. You know? Like, if you're one of those people that cry because your neighbor's dog barks, then, you know, you're probably at home too much. SPY starting to break the volume weighted average price. We'll see if it holds. Again, tomorrow we do have a lot of stuff coming on. So just to put this into perspective, team, tomorrow we have jobless claims numbers. Today we had the JOLTS job report. Tomorrow we have jobless claims numbers. We got the Challenger job cuts at 7:30, the non-farm employment change for December at 8:15 in the morning. We got jobless claims numbers at 8:30, import-export prices at 8:30 as well. Those will move markets some at least. We'll see how much they do, but yeah. No, I don't trade the bank Nifty. That's mostly, you know, an Indian thing, and I've just never traded it before, brother. Hope you understand, you know. Shouldn't we be happy if the dollar index is going up? If you're sitting on cash, maybe. But conventionally, maybe. But usually, no. Not right now in the market. In the last 6 months, no. Inflation's too bad to want to see the dollar move up. There's an inverse correlation usually with it. So, like, if you look, so for instance, SPY has gone up over the last 5 minutes. If you look at the dollar index over the last 5 minutes, you can see there's a negative inverse correlation here. Yeah, there's probably some correlation with it, I mean. Rosie's a good name, you know. Yeah, evaded the downtrend. Yeah, that's a good one. Yeah, you know, rugged. That's me, bro. I don't know where the market's going to close, green or red. Let me know. Dog is bearish. I think the dog is bearish, honestly. You know, he kind of looks like a bear. The dog genuinely, like, literally is bearish. You know, like, y'all want to see this dog? I'm telling you. He looks like a bear. This is Bruce when he was little. I'm going to show you a picture of him when he was little. I'll put it in the Discord. Market's running up. Dollar index is falling down some, though. So yeah, Bruce is bearish, and this is him right here. This is him like 3 months ago, 2-3 months ago. You know. Yeah, he's cool, great dog. The Fed minutes. We're kind of neutral from it right now. We're still indecisive. You can see, like, from the Fed minutes report, we've gone down and up and down and back up. And so, again, we're pretty sideways, but we still got time. We'll see if we break on one side. That's kind of what we're waiting here. It's a German Shepherd. Yeah, and that one maybe. I mean, he's a German Shepherd. He looks even cooler now. I would get a picture, but he's outside now. I'll put him outside. All right, guys. SPY still up to 384.40s. Yeah, I mean, he looks like a black bear is what he looks like. Like, that's why we used to have... The reason I got a black German Shepherd is because when I was young, we had a black German Shepherd. His name was Bear. And we called him that because he looked just like a bear. You know, he looked like a bear when he was a puppy. And so when we got one, that's why we got a German Shepherd. But yeah, that's Bruce. And so he actually looks scary and sounds scary, which is, you know, good combo. He's really a sweetheart, though. Like, he's a ball of love. Like, he's not mean ever. But yeah, so SPY's been neutral. Again, we can go through the ranges here. Here's the last 10 days, neutral market. Here's the last 90 days. I guess we can't look that deep. Last 90 days, we are slightly down over the last 90 days. Last 6 months, very neutral, slightly green over the last 6 months. Last year, red, downtrend for sure. And then, of course, last 20 years, very green. So that's the SPY. That's the S&P 500. I kind of want to buy this dip here, though. I might buy this right now and trade some. Let me see if I can get into something real quick. Hold on. We're getting 75 shares of the SPY. We might actually add another 25 to get 100 shares. All right, so we're in 100 shares of the SPY here. We'll see if we get a pop-up, and then we'll take profit quickly into it. All right, we just cut a little bit, holding 50 shares. We'll hold the rest to see if we continue to get a bounce. Yeah, but the Federal Reserve is not a government agency, you know. I'm not really an options trader. Oh man, so we are reversing on my position here. We'll let 384 test. But man, I mean, we're already green today, so we'll let this test the volume weighted average price, but because we're not going to be red today anyway, we might be closer to break even though. But we break under the VWAP here, we're going to cut this. All right, so we're bouncing up some. I don't like that trend. It looks like it wants to break on the downside here. So we're going to get out and wait. We're up a little bit on this. In futures, we're up more. Oh, y'all want the picture in Discord? Yeah, the picture's right here. All right, market's starting to turn here. Dollar index is starting to bounce back up. Again, we're pretty sideways in this range from the Fed minutes report. You can kind of see the range here. We've been in this kind of rectangular range. I kind of messed up on that last part. We've been in this rectangular range essentially since the report has been released. You know, this is kind of what we're sitting in right now. So again, I mean, we got time, but we'll see. The next FOMC meeting is at the end of December. Or at the end of January, I mean. So the next Fed meeting is going to be at January 1st. All right, so we're going to short this now. I mean, we are in a sideways range. It's 2:30 market time. We're going to short this. All right, so we basically just made our money right back here. 25 shares left. We'll ride this if the breakdown happens. Trying to catch a broad breakdown on one side, but we are pretty neutral. It's February 1st. Yes, now it's January. Yes, correct. But the next FOMC meeting is going to be February 1st. Again, if they happen every 6 weeks. The last one was mid-December. You know, so the next one's at the end of January. because they happen every 6 weeks. And again, I kind of want to short some more of this. 50 shares here. It's kind of risky, but again, we've already got a nice profit of cushion on the day here. So we can kind of swing with a little bit less worry, because even if we lose here, we're going to be break even on the day on Thinkorswim. So take another 75 shares here, and we'll add another 25 if we need to, up to here. All right, we got back 100 shares. See if we get a flush rejection and a break at the bottom of the range is what we're looking for with this. Yeah, there's a rejection. Let's see if it goes down some more. There we go. There we go. All right, we took half off there, so we got ourselves back to green on this trade, holding 50 shares more. There we go. Cut a little bit more. And we'll go ahead and get out the rest there. So we actually had a green trading this so far. Yeah, so we're green on this. We'll see if we get some more trades. You could, here's the breakdown of that range we drew. Should have stayed in it, but that's okay. Also, guys, y'all check out Chart Prime. One of the ways that we can judge momentum here. Chart Prime is a trading view indicator service. So if you look at like the S&P 500 right here, you could also use it on Bitcoin. I hear a lot of people talking about Bitcoin, a lot of like crypto, all that stuff. It's a trading view indicator service. So you can use it in stocks, crypto, Forex, futures, and it's surprisingly accurate. It really is surprisingly accurate. Like, look at this here, just to show you an example of this, right? Here's 2 examples of it. All right, so it'll give you these personalized signals. Here's a support or resistance. It'll automatically draw support or resistance for you, all that good stuff. But what it also shows you is candlestick momentum and trend reversals, right? So look, here's the real key is waiting for 2 to show up at once. So here's candlestick momentum. Here's a bullish engulfing candle and a reversal up signal, a huge bounce up over the next couple minutes. Same thing here. Here's 2 candlestick momentum signals and a reversal up signal, huge rebound over like a 20 or 30 minute period there. And you can use this over and over again in stocks, crypto, Forex, futures. They are a sponsor of mine, and so I'm certainly biased in their favor. But like if you go back and you look at how accurate they are, they're surprisingly accurate. Here, just look at these examples right here. Possible reversal down right here, drop. Bearish engulfing, drop. Possible reversal up, bounce. Possible reversal down, drop. And again, you can use it in stocks, crypto, Forex, futures. It's less than $60 a month. They are a sponsor of mine. You can. This is just a small percentage of overall what they have available too. So very cheap. You can get a pretty good deal if you use my link as well. I'll post this link here. Great way to help support the channel. Again, they are a sponsor of mine. So I'm certainly biased in their favor. Helping support the channel. This is how we subsidize the channel. And again, we don't sell any content. It's called Chart Prime. There's the link right there. We put the link in chat. You can also find the link in the description. All right, market's starting to break down here. And again, you can use it on Bitcoin, crypto, Forex, futures, stocks, the S&P 500. We use it on a lot of different things. Oh, man, I'm just now noticing my camera. You can't see me. Have y'all been talking to a head for the last, 20 minutes, man? Nobody's going to say, yo, John, we can't see you, bro. I'm going to raise my desk here. All right, looking for a little pop here. A short one position here with 25 shares, just one. We'll maybe add a little bit more if we need to. I want to see if we start to break down and test that previous closing price and go really red on the day. Remember, tomorrow we've got jobless claims, import-export prices. There we go. All right, we're going to cut a little bit more of that. We'll add a little bit more because this is a really weak sign. There we go. Cut a little bit more. And we'll cut that too. All right, so like I said, we're kind of scalping this. We haven't really had too many losses, but kind of scalping this back and forth here. We'll see if we get a firm breakdown. You can watch that previous closing price down here too. Yeah, the dollar index is starting to bounce back, but not a ton. Nvidia puts. Yeah, we can watch the dollar index here. And again, guys, here's the thing. If you see me trading the SPY, we're going to do one more sponsored plug and then probably close it down here. But if you see me trading the SPY right now, right, you see me trading the SPY, this account's 40,000. So it's 150,000 in buying power. But if you want to do what I'm doing here, you don't need to have that much money. You can trade futures. And here's the E-mini. Here's the futures contract of the S&P 500, and it's exactly the same. And you can trade this right side in futures, no PDT restrictions. You can day trade short with a margin account with no PDT restrictions in futures. And if you want to try out futures for cheap, the base package on Top Step, less than $150 a month. If you use my link, it's like 130 something, I think, if you use my link. But what they do is they give you a demo and they test you to see how good of a trader you are. And I think most people are not going to be able to pass all their testing to get funded, but it builds you into a better trader. It's a great test of skill, and it's a lot cheaper to see if you're really ready, to see if you're ready to scale up, to try out something like Top Step where they give you a demo. If you can hit their target while following their rules, they fund you. It's a lot cheaper to do that than put up 10K yourself in futures and risk that and lose thousands of dollars. If you lose Top Step, you're down less than $150 a month. It's very cheap. You'll know whether you're ready to scale up or size. But if you actually are good enough and you get funded, there's a 90% split. You get to keep 5,000 of your first profit without giving up any split. And, it builds you into a better trader. They're a sponsor of mine. I'm biased in their favor, of course. But if you want to check them out, here is the link. With that said, we're going to go ahead and close it down, guys. I don't see much else price action that I like here. We will be back tomorrow bright and early, guys. So tomorrow, we got jobless claims numbers, we got challenger job cut numbers, and we got import-export prices for tomorrow. So y'all be ready. We'll be covering that live here. We got services PMI at 9:45 as well. We got crude oil inventories. We got a lot of data dropping tomorrow that will influence the markets. And just like this one, we will cover the data as soon as it drops. If you saw this morning, we had the JOLTS job opening report this morning. We cover the data as soon as it comes out. Thousands of people tune into this stream for that reason. So, hey, hit the subscribe button, hit the notification bell. We appreciate it. Thank you guys so much for helping me hit 95,000 subscribers. We're pushing very close to hitting 100K. Very, very close. We're already at 95.2 thousand. So very close. Let's break 96K and let's keep pushing and keep growing. Thank you guys so much. We appreciate the love and support. Yeah, the Fed Minutes is already out. Again, the Fed Minutes is a PDF file that goes live. Look in the description if you want to see the link to where the FOMC Fed Minutes report is. I will put the link up in chat for you right now, though, if you want to see it. This is the Fed Minutes report for this month. Again, hit the sub button, hit the notification bell. Yeah, it's being interpreted as bearish for sure, Scott. It's definitely down. We're certainly down relative to when we started here. So the Fed Minutes report came out at 2 p.m. So just to give you an example, we came out, the report came out right here. So that's when the report came out. And so the price action since then is that, basically. So that is the report. Also, join our Discord. Link is in the description. Love you all. Y'all be safe. Hit that like button, hit the subscribe button, and yeah, we'll be back tomorrow morning for, again, challenger job cuts, jobless claims numbers, import-export pricing. Friday, we have unemployment. So we got a lot of stuff happening, guys. Hit the sub button, hit the notification bell. I'll see you guys later.